What is up, guys? I want to start making videos where I review charts for you guys, give you guys my outlook and price targets, whether that is bullish or bearish. I'm going to be starting this video with HIMS, but I would like you guys to comment down below. Top comment will always get the next video for that stock of your choice, whatever you want. Put it down there and I will review it. In the description, we do have our links to our WAP and Discord, which you can both join for free. We also have a paid premium membership where you can see more charts like this, but let's go ahead and dive into this. There is going to be no editing, so I'm sure there's going to be a few mess ups here and there. Just stick with me. But I do want to start this little series off with HIMS. I think HIMS has a great long-term setup. I really liked this falling wedge. We can kind of draw it over here. And this is another big thing that I want to help you guys with. I've had a lot of people ask me how my technicals really work. So I'm going to be trying to talk you guys through it the best I can, so that you guys can begin to understand where I'm coming from with all this, yada, yada, yada. Let's keep going. All right, so we have HIMS on the daily chart here. We're breaking out of this beautiful bull flag right here, and we can do one of two things. You can take your Fibonacci retracement from a high to a low here, and this can be our price targets. I'll change the color for you guys. So we can see our short-term price target coming out of this wedge is going to be 41.74 at the 1618, and then 52.61 at the 2618. And this is going to be my target for the end of the year on HIMS. I think we can get there. And from my entry personally, this will be, my entry was 23.80, so exactly the bottom actually. I know I bought prior to that, but turns out to be the bottom. That is going to be a 118% return for us. I have 200 shares of HIMS, and I'm going to keep buying under all-time highs really of 35. So I think this is going to be a great stock looking forward. I recommend buying the stock anytime under $35. You do have plenty of time. Once again, even if you were to get in late here at that $35 range, you're still making 50%. That is really good to see. And I think this thing can get a little parabolic here. $63 price target's a little high, but I think we could see something like 54 to 56 to 58. But I also want to go over our other price targets here. If you want to use Fibonacci extensions instead of retracement, it really is your choice. I use both. They're not off by much, as you can see. Oops. Drag that back up. Stick right there. All right. Using this Fibonacci retracement, it is a little bit more drawn out, the extension, sorry. But you would take that from the low here of the move to the high of the move and then to the bottom of the move. And right now we're moving out of that. So what you would want to see is you'd kind of want to line them both up almost like this, where you kind of have them both on your screen. And then for a while here, you'd kind of just want to see what gets respected and what doesn't. So say we come up to this all-time high level, which should happen pretty soon here. This 35.02 level, say you hit that and then you drop back to your 786, test around there and then jump. I would begin to follow this Fibonacci retracement over the extension, but say we hit this 33.88, stop for a little bit, and then jump to that 39.87, and maybe dance around there before continuing higher to the 1618. I think that is just as bullish, probably more bullish, but if it does decide to follow that, you trade with that. If it doesn't, you trade with the other. One of them will be right, and I could put money on it that is really going to be the way. I do like retracement until you get to all-time highs, and then I would do extension. It's kind of how it's used. So we can go ahead and throw an orange color on here, and we'll leave that. But even on the weekly chart, you have a huge cup and handle back here, and then you had your handle right here. We can go ahead and draw that out with a little, let's see if a trend will do it for us. This is your handle, and then you'll have your cup. This is a you'll see this a lot. This is honestly what I look for these undervalued stocks. So you can get in early. Beautiful cup and handle right here on the bottom. We can go ahead and make this a little bit bigger so you can see. Beautiful cup, handle, and then break out through that. Here we can actually kind of see how we've respected targets in the past. If you take this to highs and then back to lows. See, and it works out pretty well. You can see that initial move was for the most part to that 2618. We did get a little bit higher than that, but for the most part, we've been trading in that range. Same with down here. You can see you hit your 100%, back down to your 618, up to your 1618, back down to the 100, and then you continue higher to the 2618. That is insanely bullish. And since we did hit this 2618, that does not mean that the move is done. You just continue on past that. There's new moves from here on. But another big thing is the Elliott wave theory. I'm not really going to get into that because it is a little bit harder to explain. But basically saying that the market moves in waves, and this is the fifth wave. You have wave 1 down to wave 2, wave 3, your biggest move, wave 4, or sorry, I have this completely wrong. Sorry, I started too soon. This is considered one move, then 2, third's your biggest move, down for 4, and back up for 5. And the fifth move is always going to be the biggest after the third move. The third move is just considered the biggest because that is structure for the Elliott wave theory. But really, I do think this name is going to continue higher. As you can see, we are very bullish on this weekly. Breaking out and on the MACD down here with RSI, both crossing looked really bullish. On the daily, you're just now crossing. Another thing I want to point out for newer investors is wicks. I don't think people look at wicks enough. But if we can just drag this box around, you can see back here where these tall wicks are. The way a candle works is you're going to have your high and low and close and wicks, basically saying right here you have strong selling pressure, leaving high wicks, drawing the price down after it was up. But now we've changed. If you look at these wicks, now you're getting bought up when you go down, meaning that there's probably a bottom forming. And obviously, I do think that this is going to be the bottom right here. I do not see us going any lower than 24. That really isn't going to happen. I highly doubt it. But even on, we could probably go to the 4 hour here. And you can see how easily this is understood. You are respecting all of these levels. And you can really find support and resistance pretty easy with this. Where you have, and it doesn't matter what they are. If they're, your 618, 2618, like that stuff doesn't exactly matter. It's just nice to know your price targets, and it's very easy to decide on those price targets when you use these retracements. And you can see how accurate these are. Obviously, there is some give and take. Like this one didn't stop exactly, but it came back down and retested right here and then continued higher where we are right now. So either tomorrow we're getting a breakout higher, or we're going to consolidate into the weekend and then probably do that next week. But we could come back down to this 29.59 area and then continue higher to your next target at that 786 for higher. And then you continue higher and higher and higher. And that's how it works. Charts are more bullish when they work like that. You don't want to see a stock just go straight up or straight down. You want to see it working away, a staircase like this, or something like that where you're finding your support, you're finding your resistance. I'd much rather see a stock go from $10 to $15 to $12 and then to $20, rather than just seeing a stock go 10 to 20. It is going to take longer and it is monotonous, and you're going to have red days and you're going to get a little worried. But with a stock like this, you look and you're up. This thing is up pretty good. Let's see, 28% in 13 days. So if you would have sold at these long wicks, the way this chart has been trading is in the morning, it's been opening red sometimes, and when it does, it'll dump in the morning, maybe down 2 to 3%. And then by, that lunchtime break, it'll flip. And then you can see this buying pressure step in and get bought up. Even here with this doji, you're still having strong buying pressure on all of these candles, all of these wicks right here. Really strong buying pressure to the upside. So I do think we continue higher. I think we definitely see this $52 price target by the end of the year. I think we could easily see 41 before summer for sure. But I think all-time highs are coming at the end of February. This name should be at $40 by May at the absolute latest. It's a really bullish setup, man. either way you look at it, whether you're on the weekly or the hourly or the daily or whatever, you have this wedge, you're breaking out of it. It's very, very strong. We're probably going to finish the week pretty bullish. If not, nothing's going to wipe out this. I mean, we'd have to have a crazy bad day. But I really do like this name, man. I think we continue higher. Their financials are insane. They beat EPS by 700% last quarter. That's pretty nuts. So I really do like this, guys. You can easily see this trend in the wedge. And if you guys don't know what I'm talking about with these wedges and like a bull flag or stuff like that, they're pretty Googleable questions, but they're super easy to figure out. I mean, you obviously have this trend right here. And once you do learn, the rules and reasons behind these trades, you'll totally understand. There's multiple charts like this. Like I plan on doing Oklo. It's one of my favorite stocks right now. Wedge, the exact same, and you can see what came out of that. I'll dive into Oklo another time, but this is another stock where you're respecting all of these levels. You can see you hit exactly at that 614, and then you took a little breather, retested your wedge, and then since then, this stock is up 53% in a week. I bought, I believe 12 days ago. I was red for 2 days, down $500, and now I'm up $1,500 in the last 4 days alone. So these stocks do really get parabolic when they do decide to run. Everyone seems to hop in, and people are going to be hopping in HIMS at $40 all the way up to $50. But I'm telling you guys about it now so you don't miss it. Okay, I've been in since $16 and I've bought all the way up. I had like 20 shares at $15 and that was the best I could buy until I started making my own profits, and I've started to move more money into HIMS, and now I'm up to 200 shares. And my average price is still only $23, so I plan to buy that up a little bit more because I have no problem bringing my price a little bit higher when I know we're going to $50. Still going to be an easy 100% return for me, so I might as well just get more equity in there. This is probably going to be it for this video, though, guys. I do want to do Hood, Oklo, or OSCR next. I'd really like to do one of those three. But if you guys do have any other stocks like MSTR, Tesla, or anything else on the market, I'd really like to take a look at it. So leave a comment down below. Get into the description. Join up on the free WAP. No charge at all. You can go ahead and see all of our premium wins, all of our premium reviews, how the trading is going in there, what we're looking at, what we're doing. And then if you are ultimately interested in premium, go ahead and join up and start making profits with the rest of us, because HIMS is not stopping anytime soon, and we have multiple other stock choices to choose from that are going to continue to go up. But that is it for me, guys, and I will see you guys in the next one.